We start off in Nigeria. The economy has contracted by more than 2% in the second quarter. Latest figures released by the Statistics Office now confirm Africa's biggest economy has slipped into a recession. The Nigerian Bureau of Statistics said the non-oil sector declined due to a weaker currency, while lower oil prices dragged the oil sector down. After two bruising quarters marked by attacks on oil pipelines in the Niger Delta and ballooning inflation, analysts say President Buhari's policies have yet to inspire any real confidence. Inflation is hovering at around 17.1%, and getting dollars is still a headache for importers. Alongside a fall global oil price, Nigeria's crude output has declined significantly due to attacks on pipelines by militants. This has continued to erode its revenue base. In the meantime, though there is still no respite for its currency, the Naira is still under severe pressure from major currencies and has hit an all-time low against the dollar. CCTV's Deji Badmus has been speaking to a currency dealer about the situation.
We have seen the value of the Naira come down to as low as 412 to the dollar in the past week. What do you think could be responsible for that?
What actually happened is that the foreign exchange inflow is low due to the drop in oil prices, which affect the global markets. And in Nigeria also, we are actually a consuming nation. We consume most of the dollars that is in circulation. Now we are an import-oriented country that consumes more than we produce. So the little currencies that comes in and now is being affected by the inflationary rates, and it's the exchange rate problem that we are having now that is affecting our currency. You can understand that last year the Nigerian currency was devalued twice, one in February and the other one in December, and that devaluation affected all markets. And so those are one of the things that are pushing our currency down, mainly the oil price that we are not getting enough foreign currency that is coming in.
Now, how much of an impact do you think the suspension of the 8 commercial banks from accessing the interbank foreign exchange window now has had on the exchange rate? Do you think it has made the situation worse for the Naira?
It affected the market, actually, but you can see most of these things are by speculation. And some people are buying dollar to keep for speculation, but the actual thing was, as you can see, last 2 weeks, the currency was dropping. The central bank decided to be giving some dollars back to the BDCs, who are actually in the market. So this thing affected the currency, and the currency was dropping. Then this change in this, the treasury bills of all these things, you see these banks not remitting money that was due to the Nigerian coffers, and then the suspension of these banks made it becomes very imperative for the currency to jump up. It was through the banks we are buying, the BDCs we are buying, that cushions the market. But when these banks were suspended, mainly those are the main banks that we are selling. So when they suspended those banks, there's no other thing that will hold the currency that actually to jump up. Most of these things are by speculation, actually. The actual rates of Naira, the currency rate is not more than 302. The actual, but the speculation drops it now to 412 we are talking about.
In your opinion now as an accountant and a forex dealer, what is the best strategy do you think Nigeria should adopt to deal with this foreign exchange crisis?
The best way is for us to diversify, because we have centered our economy on the foreign currency. We have centered our economy on oil. If there's diversification, in short, it was the problem that was caused by our previous governments, other heads of states. We all concentrate in this oil because the oil is coming out from one place. If we have diversified, for instance, in the 1960s and 70s, cocoa was one of the main foreign currency owner. Coal was foreign currency owner. Oil was foreign currency owner. Granite was foreign currency owner. All those things apart from oil. Then when the oil was discovered in 1950-something, then started production in 1964. Everybody relaxed. All those sectors that brings in foreign currency collapsed. Then it is oil. Now the oil prices collapse. Where then do we go back again? We have to go back